Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. I'm suffering a little bit from a scratchy throat. I'm hoping that I can get through this report and that the volume can be sufficient for you, so I'll do my best. We'll see how it all plays out. But anyway, we had CPI data come out much weaker than expected. Well, weaker than expected. 0.1% for the headline, 0.2% for the core. The year-on-year measures came down as well. To 7.1% from 7.7% for the headline number and 6.3% to 6% for the core. So good news on the inflation front, and that is seeing the stock markets move sharply higher. We're seeing yields move sharply lower, with the 2-year down minus 21 basis points now, and the 10-year down minus 16 basis points. So good news across the board here as the market prepares for the terminal rate being reached sometime sooner rather than later, and perhaps a Fed that is more open to either going one way or the other. Who knows how that will play out, but we know it's not going to be right away. The playbook is probably still in play for 50 basis points, but the question comes, do they make it to 5%? That target that the market was looking toward. The Fed funds terminal rate is now down probably around the 4.83-ish type level, below that 5.0% level. So we'll see how that all plays out, and that's going to be given to us tomorrow when the FOMC meets and they release their dot plot and their expectations for growth and inflation and so on and so forth. So it's going to be another key day tomorrow for the markets, and we'll see how that all plays out. But so let's take a look at some of the technicals. We'll start by taking a look at the euro versus US dollar to start our trading day. So sit tight. Let's go. Looking at the euro versus US dollar, we got out of this up and down trading range that we've been seeing in the month of December. That trading range has seen the price trade above and below the 50% retracement of the 2022 trading range. That 50% comes in at 1.0515, and you can see the price moved away from that level. This is the high price from 2022. This is a low in this 50% retracement. And through the month of December, you can look at every single daily bar, and every single daily bar except for today traded above and below that 50% retracement level. So that's a key tell, perhaps. And what we don't want to see is the price move back into that trading box right here. That comes in at 1.0596. That was the old high for December. So we'll be watching that level. Also, we have the swing area in here, which is above that level, which comes in between the 1.0615 and 1.0640 level. And as you can see, or if you were watching, the price in this current hourly bar actually dipped it, and it is dipping down into that area below the 1.064 level, currently trading at 1.0636 as I type. But as long as the price can remain above 1.0611556 right through here, that still keeps the buyers more in control here for the euro versus US dollar. On the top side, the next key target comes in against a 61.8% retracement right through here at 1.07468, and then we have another swing area up here between the 1.0773 and 1.0805. Relatively speaking, those levels are still relatively low. If you take a look at the weekly chart, here's where we stand as far as the euro versus US dollar. Yes, we're above the 2017, 18, 16 lows, and these lows back here in 2014. But relatively speaking, we're still near the bottom of the ranges here for the euro versus US dollar. So there's room to roam if the dollar wants to go lower and the euro wants to go higher. There certainly is, and technicals are certainly going to tell some of the story for this pair. Watch the 1.0615 level and 1.0596 level on the downside here today. Let's take a look at the dollar versus yen. And if we take a look at this price, it fell back below its 200-day moving average for the second time this month. Earlier in the month of December, the price moved down to 133.61. Closed one day below that 200-day moving average. That was more bearish, first time since February 2021 that the price closed below the 200-day moving average. But the next day, it was back to the upside, and you can see the price is back trading near the 200-day moving average at 135.265, currently trading just below that one level, 135.23. We don't want to see a lot of momentum above the 200-day moving average, folks. So that would be a disappointment for the sellers looking for more momentum, especially since we haven't moved down toward to test the low price from December. So sellers wanted to see the price stay on the downside below that level. If we start to trade more to the upside, if we start to trade 135.35 or thereabouts, we could see some covering in the dollar versus yen. That would be a disappointment off of the break of the 200-day moving average. Let's take a look at the sterling versus a US dollar, and again on the daily chart, we went up and tested a key resistance level. That resistance level comes in at the 61.8% retracement of the trading range for the year. That level comes in at 124.507, and the price got within about 7 pips of that level at around the 123.93 level. Was our high price trading here today, and the market has rotated back to the downside. Now on the downside, we do have this swing area which comes between 122.787 and 123.436. That higher level was defined from early December, so we want to stay above that old high, keep the buyers more in control above that old high. We're breaking out. That's what breakouts are, staying above the breakout level. So don't want to see the price move below those levels. That's going to be our support target on the top side. Get above the 61.8% retracement. It opens up the door for the further upside momentum in that currency pair. Let's take a look at the Aussie versus US dollar, and it too shot to the upside. I'm going to take a look at the daily chart, and moved above a swing area through here between the 0.6828 level and 0.68597. The high price in the month of December came on this day right here at 0.68504. So keep that level 0.6850 right in the middle of between 67 and 69, or 68 and 69, I should say, 0.6850. That should be where we should find support against that area, I would think. We don't want to see the price move markedly below that level, and certainly not below the 0.6828 level. That would be a no-no for the bullish break in trading here today. On the top side, however, there is some pretty key resistance up here, starting with the 200-day moving average. That comes in at 0.6903. Followed by the 50% retracement of the 2022 trading range at 0.6915 level. Those levels are going to be key targets to get to and through. The last time the price came up toward the 200-day moving average, found early sellers, and this time right here we broke above it for one day and then failed and rotated to the downside, and that was it. So both sellers through here, we don't want to see that happen. If you're a buyer, you'd rather see the price move down into here and then break to the upside for the Aussie versus US dollar if the buyers are to take more control. Alternatively, we could go down lower and we could start to break these levels, and that would hurt the market sentiment here for the Aussie versus US dollar. Now, I want to take a look at the stock market next before I sign off. It has moved sharply to the upside, but it is coming off here. Of concern here for the Nasdaq index is that the price moved above its 100-day moving average. That's a blue line in this chart right through here, and the price is seeing some move back below that level. That 100-day moving average comes in at 1146566 area, and you can see we're trading at 11417. So we're seeing some disappointment to the downside on the break of the 100-day moving average. We want to see the price rebound, get back above that level if the buyers are to take more control. Right now, it doesn't look all that hot for the Nasdaq index. Let's take a look at the S&P index, and if we take a look at the S&P index, it's moving back toward its broken 200-day moving average. That 200-day moving average comes in at 4033.687. If the price moves below that level, that would be a disappointment. What is a little bit of a disappointment, or I'll classify it as a disappointment, is that this price right here and this price right here, this price early in December reached 4100.51, and the high price today reached 4100.96, so just 40 cents above that old high, and the price couldn't sustain the momentum. The market rotated back to the downside. So some little concern here in the stock markets after their sharp rise, after the better than expected CPI data, has traders scratching their heads and wondering, can this momentum continue, or are we still in the same old, same old? My name is Greg Michalowski with a scratchy throat. Good fortune with your trading. Bye-bye now.